Right, let's jump straight into this explainer. If you were looking at a 3 to 5 year investment horizon for BZFD, here is the golden rule. Whether they beat EPS by a few pennies, honestly, it's not the main event. What management actually says on August 4th matters infinitely more than the raw numbers they report.
So welcome. Today, we're carefully unpacking a professional investment analysis of BZFD's turnaround strategy under Byron Allen, with Q2 results dropping on August 4th, followed by a seriously anticipated conference call. Think of us as your virtual investment committee. We're here to figure out if this upcoming report makes the long-term case for the business stronger or weaker.
Here's the roadmap for our evaluation today. First, the earnings call thesis. Second, Byron Allen's strategic roadmap. Third, key financial and AI metrics. Fourth, we'll look at bullish and bearish scenarios. And finally, number 5, the investor action plan.
All right, kicking things off with Section 1, the earnings call thesis, and why words matter way more than EPS right now. You know, there is a massive difference between mature companies and a turnaround situation like BZFD. For those big, established companies, the earnings release drives the stock. It's totally backward-looking, just telling you what already happened with revenue and cash flow during Q2. But with a turnaround, forward-looking management commentary is the whole ballgame. The earnings call tells you what they actually believe is going to happen over the next 12 to 36 months. As investors, we need to know, is this business actually worth owning in 2028? A single historical quarter just isn't going to answer that for us.
Because look, the market already expects some pretty soft numbers here, so changing sentiment, that requires hard evidence that things are actually improving. This call carries massive weight for 3 huge reasons. First off, Byron Allen is super early in his ownership, and we literally need to see his vision turn into execution. Second, the recent challenges, well, they're already priced in by the market. And third, the stock's valuation has incredible room for a major re-rating if, and that's a big if, investors start believing this is transforming into a stable, cash-generating media company.
Moving right along to Section 2, Byron Allen's strategic roadmap and what we think is the most important metric.
What we really need here is for management to sound confident, but more importantly, specific. We want measurable goals. We're looking for real answers to some crucial questions, like how much influence has Byron Allen actually had so far? Have strategic priorities completely shifted under his watch? Are there any sneaky acquisitions on the horizon? And most crucially, is there a long-term revenue target? Concrete, measurable milestones, they literally change the entire narrative for a stock like this.
Okay, Section 3, key financial and AI metrics. Basically, the hard data we actually need to see. Revenue stabilization is absolutely the biggest financial metric we're tracking here. Just to give you the baseline, back in Q1 of 2026, revenue fell about 12% year over year to roughly $31.6 million. Now, that reflected some pretty weak advertising, which was only partially offset by stronger content revenue. So heading into Q2, consensus expectations are actually sitting a bit higher, looking at approximately $43.1 million in revenue and an EPS of negative 14 cents. But honestly, the key isn't just that headline number. It's figuring out whether that revenue decline is slowing down or, ideally, reversing. Here are the exact parameters we're looking at. Anything coming in below $40 million, that is highly concerning. Hitting that 43.1 million consensus mark is pretty neutral. A good result lands somewhere between 43 and 45 million, showing that the decline is shrinking. But an excellent result? That would be revenue printing above $45 million with flat or even positive year-over-year growth. Beyond just top-line revenue, we've got 3 rapid-fire strategic priorities to listen for. First, advertising. Historically, this is their bread and butter. We really need to know if programmatic advertising is growing and if advertiser demand is actually returning. If advertising stabilizes, the market might just start believing this turnaround is real. Second, content and studios. This has quietly become a super interesting bright spot. We definitely want to hear about more film projects, new streaming partnerships, licensing deals, you name it. And finally, the cash position. Given their past liquidity concerns, cash is absolutely critical right now. Has operating cash flow improved? Are they going to need additional financing? Proving that liquidity is improving would materially strengthen the entire investment case. And then, of course, there's artificial intelligence. This is probably where Wall Street is going to react the most. And you've got to have a specific mindset here. When it comes to AI, real, tangible adoption matters infinitely more than just ambitious announcements. The market doesn't want to sit through another theoretical presentation. It wants hard numbers, like how many actual users do you have? How much revenue did AI actually generate? Vague commentary instead of measurable milestones? That's a major red flag for sure. Which brings us to Section 4, Bullish and Bearish Scenarios, where we anticipate the market's reaction.
You've got to remember, small-cap turnaround stocks often react way more to guidance than to the reported results themselves. For example, check this out. Inline results paired with a super strong Byron Allen roadmap could actually generate a 10 to 20% positive move in the stock. That's actually higher than a simple revenue beat that comes with a limited strategic update. Looking at the extremes, a revenue miss combined with a weak outlook, that could trigger a brutal 15 to 30% drop. But on the flip side, a beat with optimistic guidance could easily send this soaring up 15 to 30%. The takeaway here is that a modest earnings beat with little strategic insight honestly means very little. What actually excites a long-term investor is hearing management confidently state measurable progress. Things like, we've secured new licensing agreements, or our AI initiatives are generating paying customers, or maybe we're seeing a return to revenue growth in the second half. Stating definitively we are ahead of our turnaround milestones is what truly changes how Wall Street values this company.
Finally, Section 5, the Investor Action Plan. Let's talk about your post-call evaluation.
You really need to evaluate the earnings report in this exact order. First, check cash flow and liquidity. Is the financial foundation getting stronger? Second, look at revenue trends. Is the bleeding finally stopping? Third, guidance. Is the forward outlook improving? Fourth, the conference call narrative itself. Does their strategy actually sound credible? And fifth, the analyst Q&A. Guys, this is arguably the most revealing part of the entire event. If executives start giving vague answers or dodging difficult risks when the analysts push them, the stock could absolutely tank, regardless of how decent the Q2 numbers looked. Because you're a long-term shareholder and not just a day trader, you should listen to the entire call and then ask yourself these 4 critical questions. Number 1, is management more credible today than they were last quarter? 2, did they provide measurable evidence that the turnaround is actually progressing? 3, has your original investment thesis strengthened, weakened, or pretty much remained unchanged? And 4, that all-important hypothetical check. If I didn't already own BZFD, would this report make me want to buy it? Answering yes to all of these is so much more valuable over a 3 to 5 year horizon than a simple 1-quarter earnings beat. So as you tune into the upcoming earnings call, I want you to keep this ultimate investor question at the absolute front of your mind. If you didn't already own the stock, would this specific report make you want to buy it? Don't get distracted by the headline pennies. Focus on the roadmap, demand those measurable milestones, and closely watch how management handles the heat and the Q&A. Thank you so much for joining this explainer, and we will catch you after the closing bell.